right. All right. Welcome back to the lives, everyone. Welcome, Valerie. Welcome, Joel. What's up, guys? All right. So it looks like we have quite a few people here. Welcome, guys. Welcome. Hope everyone has been having a great day. You've had a great start to this week, so let's make sure we finish strong. But we do have something important coming up tomorrow, which is April's inflation data. All right. So first of all, you guys need to know that April's expectations for inflation is at 5%. So 5% is the same as March's. So what does that mean, guys? What does that mean? If the data for March's inflation rate was 5%, then what is April saying if they're expecting 5%? I told my CFO Stream and Watch members this already back in March. Excuse me, back in April. Anyone have any answers? No? Well, the answer is that, well, if you guys remember, from February to, excuse me, yeah, well, no, wait. Oh yeah, from February to March, we saw inflation coming down from 6% to 5%. Okay, that's a drastic decrease in inflation. We just completely skipped whatever's in between 6 and 5, all right? And we just went all the way back down to 5. We didn't go out to 5.2, 5.3, 5.5, 5.6, 5.8, 5.9. We didn't go to any of that. And so we dropped from 6% to 5%. So it kind of makes sense to me that economists and analysts are expecting 5% again, because we had such a drastic drop between February and March. And so now between March and April, it kind of makes sense that the decrease or the disinflation rate kind of slows down, right? Because we're in a disinflation stage of the high inflation, I guess, part of the economy. So this tells us that, this tells us two things actually. So number one, if inflation comes in higher than 5% than the expected number of 5%, so I'm saying maybe 5.2%, the market can react negatively. So that's something that you guys have to be watching out for. And then number two, if we do end up staying at 5%, right? So we come in line with expectations, that's also going to be a negative reaction, right? And why? Why is it going to be a negative reaction? Because we are staying at 5% again, right? We've had a drastic decrease from 6% to 5%, so why isn't inflation going down more? That's exactly what the market is going to question. And so that's how we'll get a market sell-off, right? Because we came in line with expectations, confirming that between March and April, inflation did not go anywhere. We did not see a further decrease in the inflation rate. So you guys have to think of it in that perspective, or perspectives. Okay? Did everyone understand that? Or did no one understand that? If no one understood that, I will make sure to clarify. Okay, perfect. Yes. I want to see some more yeses. Understood? Okay, perfect. Understand. Okay. Yes, sir. All right. Okay. So, again, now, how are we going to translate that perspective onto the actual markets? So, let's go to SPY. Well, let's take this tab out. Oh, I'm lagging here. So, what we have here is that SPY here has been making a very nice tight range on this descending level of resistance. Okay, so I already gave this to my CFO Stream Watch members. We've been looking at the same levels here, and we've been stuck between these two levels, 410 and 413.50. Okay, we've been respecting this since Friday of last week, and the price range has been very tight for today and yesterday. Makes sense because tomorrow we have very important data. And again, let me give you guys a quick review. The reason why it's important is that between February to March, we had this drastic decrease, right? Exactly 1% decrease from 6% to 5%, right? 6 minus 1 equals 5, right? So 6 to 5% drop in the inflation rate. So that's a very quick, I would say, velocity drop in the disinflation that we're currently seeing, or quote unquote disinflation, whatever you guys want to believe. And so if we decide to stay at 5% again, if we come in line with expectations again with inflation, that's going to cause a lot of problems in the market. Because again, if we have such a large drop in the between February and March, why aren't we going down more, right? Why aren't we continuing to go down between March and April? So that's something that you guys should be questioning before we head into the markets tomorrow and before the inflation report comes out, the CPI report. Okay, so SPY, it's very clear here. Okay, very clear. We either get a break over 413.50 or if we get a break over 410. Really simple, right? Keep it very simple, especially on a day like tomorrow. There's gonna be high emotions everywhere, right? We're gonna be running on high emotions. You just have to remember, guys, there is a gap up between Thursday and Friday of last week. Okay, so if I go down to the 2-hour time frame, my most favorite hourly time frame, we have a double bottom here, right? So the left bottom right here is at 403.78 and the right bottom is at 403.74. They're only off by 4 cents. And so a double bottom is usually what? A bullish chart pattern. So this means, okay, this means that we should be able to see a nice pump upward. However, we haven't seen that yet because of tomorrow. Huge catalyst. And we also get PPI report on Thursday. So that's going to be another huge catalyst to be looking out for right before the market opens. So CPI and PPI are very important data to be looking for to see where the inflation is at right now, and to see where the Federal Reserve can kind of orient their, I guess, or readjust their actions to defeat inflation, right? So on the 2-hour here, you guys have to remember SPY tends to fill in gaps, just like it did right here between, 2 weeks ago here, between Thursday, this candlestick, which was Wednesday, and on this candlestick, which was on Thursday. And guess what? This gap up was filled last week through Thursday's price action, right? So SPY always fills in gaps, whether it be gap ups or gap downs. And then now, here's the most important part, guys. Do not leave right here. If you do gap down tomorrow, right, and if you're stuck right here, right, we'll most definitely fill in the gap all the way back down to around 407, and possibly, we can continue to go down, even break below 403.78 or this whole number level of 404, and come back down and fill in the gap or the two gaps that we have here that we've never filled, especially this very, very large one right over here. All right, so this is where we had that large gap up and we broke over that psychological $400 level, right? So this is critical. All right, there's a critical gap here because if we fill in the gap here, that's going to create some bearishness, actually a lot, because that means that the price broke below 400. It did not use it as support. And we come back down and we fill in this gap, right? And now create a lot more sellers momentum. Okay. So I'm not really that interested in this one right here, this small gap. But if we do fill in the gap, that's great. I do want to see a retest of 400 if we're back down here at some point. But again, I'm still going to trust the charts and what we're seeing right now. And what we have is a double bottom, right? And we have a double bottom and we're sticking very close to this descending level of resistance. So I hope that the market will react accordingly to the chart here. And hopefully it reacts bullishly since the chart looks very bullish. Every hourly time frame, every daily time frame, or on the daily and the weekly looks pretty bullish. All right, we've been heading higher and higher and higher with higher lows and higher highs, which is typically a textbook uptrend. So on the daily, if you go back, we're just looking for a nice move up over this 413.50 level. All right, and eventually I want to see another retest at 415.70-ish, right? And that's where we'll see probably another rejection because we saw that happening here and over here when we tried to break over it and we created that new pivot high point compared to this one right over here. So again, look at 410, look at 413.50. Now, again, I'm going to bring back my statement that I said a long time ago already. We are slowly desensitizing to every single important economic news, data, and even the FOMC meetings, right? Even the rate decisions. So if you guys remember, we had FOMC, right? And we hardly moved, right? So that's kind of funny, right? Because it's literally telling us the market is slowly not giving a crap about incoming data and what the Federal Reserve is doing because we were really sensitive to all of those things from all of 2022, right? And that's what really drove the volatility in 2022, right? As we went up and down, up and down, up and down, but generally it was a nice downtrend, creating a very, very deep bear market, right? Now, what's interesting right now is that specifically the tech sector, right? QQQ has entered into a new bull market from December lows, right? Or even just from October's lows, because I mean, December and October's lows are kind of similar here, right? It depends on where you look at, but that's very subjective. So overall, whether it be from October or December lows, QQQ has entered into a new bull market. And I'm going to continue to watch tech names, especially the tech leaders in each sector, because of the fact that the overall market or the overall tech market or tech sector has been incredibly strong to start out this year. And that usually means or indicates that institutional money or big money or smart money, whatever you guys want to call it, are pouring into this specific sector. All right, and retail is slowly following along. Okay, now if you guys remember, I said this back in 2021, right before 2022 started. I said it looks like institutions are trying to take out retail or amateur investors, right? People who don't know what they're doing or who don't know how to read charts or read data or look at balance sheets, income sheets, whatever it may be, right? And the reason for that is that, well, they're trying to push them out by pushing the prices all lower, and that's what happened in 2022. And so those type of investors or amateur investors get completely wiped out, or they lose confidence, or they just completely aren't involved with the markets any longer. And once that happens, big money comes in, laps up those shares, right? They take all those shares at lower prices and pumps the market up, while the retail traders or amateur traders are left to the side just watching. All right, they just have to watch now because they were too scared to even try to take a nibble, right? And they're kind of resisting getting back into the markets because they don't want to get wiped out again like they did in 2022. And that's one of the main reasons why the market has been moving up a lot. As retail investors continue to stay on the side, right? They've basically been quote unquote benched in baseball terms, right? They've been benched, or basketball terms. Well, I think that's a basketball term actually. They've been benched. So that's something that I don't think, people will take too much attention to or pay too much attention to. But I think it's worth telling you guys that the market will move when you're least expecting it, right? And also when no one is really paying attention. And that's the reason why maybe, let's say you're looking at a name and you come back maybe a few weeks or a few months later, you see that the price has just absolutely skyrocketed, right? And that's when you're like, whoa, what happened? Okay, and that's when you're like, oh, well, I should look at this name. But if you take a look at the volume, right, during that run up on that name, you're like, wait a second, this is really low volume. So why did this move up, right? Well, that's because no one was interested. And when that stock decided to move up, it was mostly buyers, but only big money buyers, right? Retail traders were not contributing to that run up because that low volume, right? But as the market players and the market makers decided to push the price and bid the price higher as much as possible, while the retail traders are benched to the side. Okay, and so remember, these big money funds or institutions have the power to move the markets, right? They have the power to move individual stocks up or down whenever they want to. Right? It sounds like a rigged game because it is, but we just have to play within their own rules and you will be fine. Okay, we are always fighting against the big players, the big money fund managers, or even just the entire market, right? I call it Mr. Market, right? We're always against Mr. Market. And it's one of those things where I always tell people that there's no use trying to fight other people over simple analysis, or saying that I'm right with my own analysis, or he's right with this analysis. It doesn't matter, right? As long as you know what the levels are at and what you're trying to play and trade, that's all that matters, right? Don't try to go and find someone who could be potentially better than me or better than you or so. Just learn the charts, right? Learn the charts and you'll be fine, right? You don't need to compare your charts with anyone else unless you're trying to do that productively, right? But don't criticize anyone over their charts, especially if they know what they're doing, and saying that mine is better or his is better or hers is better. It doesn't matter, right? So just a quick kind of tangent here, guys. Don't fall into that trap of trying to create drama, right? We're all playing and going against Mr. Market, all right? Mr. Market makes the levels and makes the rules, and we just have to play them accordingly, okay? So, for QQQ here now, let's get back on track, right? The number one thing that I'm looking for QQQ. So again, SPY, very quickly, summary, all right? If we break below 410, which is our immediate daily support, we will fill in the gap that we made between Thursday and Friday, and possibly come back down all the way back to 404, which by then, I forgot to mention this the first time around, the daily 50 SMA should have caught up by now to the price, and we will retest it for the first time since the breakout back in late to mid-March, right? And that will also mean that we have our third retest at this 404 support level, because we had 1 and 2, making a double bottom. So that will create a triple bottom. But what does that mean? Well, we've retested the support level at 404 3 times. And if that happens, that usually tends to tell us that sellers are strong and buyers weren't able to keep the price from coming back down to this 404 support level. Right? Is everyone with me so far? I didn't really ask anyone here. feel like I've just been talking. Been really checking with you guys. Welcome guys to all the new viewers. Welcome. Welcome in. We got 3 likes already too. I didn't even see that. Perfect. 3 likes. Thank you guys so much. Okay, perfect. You're with me. All right. Now, for SPY again, if we do come back down to 404, just expect a bounce because again, it is a support. But know that with that bounce, okay, it'll be most likely very, very weak. You won't see a lot of buyers coming in because again, what did we just do while we're coming down to that 404 support level? We just filled in this gap here. This gap up that was created last week between between Thursday and Friday. And who created this gap up? Buyers. So if we come back down to fill it, that means we're going to be kicking out any type of buyers that are staying between this gap, right? And so that will create more confidence for sellers to come back in while in this gap, and we'll see that price pushed lower until we hit 404, where we see an intermediate bounce with small amount of buyers who are still trying to defend this 404 support level. And we'll see buyers coming in at the daily 50 SMA as well. Okay, so depending on how we bounce, I don't know that yet, right? I mean, I don't have the data here, and I don't even know if we're gonna come back down to 404, because again, tomorrow we can just absolutely rocket higher during pre-market hours over 413.50, or maybe even touch and retest 413.50 during pre-market trading, right? So that's something that you guys should be looking out for, okay? I'm just more so getting ready for any downside risks since I am holding swing trades. So that's something that you guys should be watching for as well, all right? I'm holding some long positions to the upside. All right, that's a quick summary for SPY. Let's take a look at the Qs. So QQQ still within the same range. Very, very textbook bull flag where we have a flat top and flat bottom. We had a nice big breakout after this consolidation between February to early March. And that's due to the February seasonality kicking in late into February and all the way into early March. And then that's when we had that kind of a V-shaped bounce in early to mid-March. And we got that nice jump higher, and we eventually broke out, and and this is where tech started to lead, right? We saw those tech leaders coming out of their caves, right? And we saw some buyers coming back in as they kind of quote unquote bought the dip, right, on those big tech names. For example, like Nvidia, right? Nvidia has been running since like October, right? The lows of October, I believe. So QQQ has also been staying really relatively strong compared to, between October lows and December lows, because again, they're kind of in the same area. So QQQ is still relatively strong, and I'll be focusing on this one, and that's the reason why in this private CFO Discord, we've been focusing on very good tech names that we've been looking at. And if you guys missed last night's review video, make sure you guys take a look at it. It's the most recent upload. Okay, let me give you guys the link. Or you guys can just click on my channel and you guys see the most recent upload. All right, it's really hard to miss. Hey, what's up, guys? Oh, thank you guys for the likes. Thank you. Let's try to get to at least 8 or 7 likes. Okay, here you guys go. This is the link here. Make sure you guys watch this either right now or after the live is finished. Okay, right here. That is the video. I put it in the live chat. So make sure you guys watch it there and pin it. So watch this video. Make sure you guys leave a like and comment. That'll be much appreciated. If you guys don't want to, that's fine. So for the Qs again, now let's kind of go to the specifics here. We're kind of stuck in a range between 312 or 313 if you guys want to round up. So 312.75 to 321.50. And right now, we're still seeing strength at and above 321.50, and today and yesterday we retested it, and we're trying to use it as new support. All right, right after we broke above it, well, 2 times here, right, in this area and last week. So again, we're still stuck at this 321.50 level, and if we're able to break over 323.50, right, this should be good. All right, so if you go down to the 2-hour time frame, all right, we see that the levels are a lot clearer here. And so if we're able to break over 323.50 and break over that 324, which has been a huge pivot point this week, or yesterday on Monday, that'd be great. But so far, we've been seeing the volume just die down completely, which makes sense as we're heading towards Wednesday, right? From Monday to Tuesday, which is today. We have April's inflation data coming up tomorrow morning before market open. Exactly an hour before market open. Okay, you guys have to remember that. Exactly an hour. Joel, you said I've been trading the bear market so long for the beginning of my trading journey. I don't think I would know how to trade a bull market. Yeah. It's actually something that we should actually go over, Joel, during our sessions. And Valerie, we need you back. Hopefully, you're ready to join us back soon. So for QQQ, again, these are very critical levels here. We're in a very tight range from 321.50 to 323.50. That's a $2 range. Right. So if you break below 321.50, that will immediately put us back to this base right here that I just talked about between 312.75, or if you guys want to round up, 313 to 321.50, and we'll still continue to range back and forth. But there are key intraday levels of support that we need to take into account, like 318.50 and 316. And I'm going to be looking at this one right here specifically because on the 2-hour time frame, we have the 50 SMA, right? And on the intraday time frames, yes, the price will hold on to the 50 SMA as a level of support, or if you're in a downtrend, it will use the 50 SMA as an intraday level of resistance. So the price does react to the intraday 50 SMA, if you guys have been wondering, right? It will just react a lot better to the 10 and 21 SMAs, which are the very, very small or short-term SMAs. Okay, and that should make sense, right? The lower you go, right, 5, 15, 1 hour, 2 hour, 4 hour, right? The 10 and 21 will matter a lot more compared to the daily. But still, all the SMAs are important on every single time frame. It's just that little nuance between each time frame is what matters. And also, it's a little bit subjective, right? You guys don't have to believe me, right? Because some people might feel that it maybe even the 50 and 200 are more important on the hourly time frames compared to, the 10 and 21 being more important on the intraday time frames. Valley said, yeah, I'll DM you on that soon. Okay, perfect. So we're about to have some more students here as well. We're about to have 2 more students. We've got another one this week. So it's gonna be busy. And I kind of want to have a group session as well. So Valley, if you want to join in those group sessions, let's do it. Let's see. Yeah, so that's kind of it for QQQ and SPY. Let's take a look at VIX, by the way. All right, so VIX was kind of popping off today, sort of. It's a very small candlestick, but the VIX has been getting crushed, and the reason for that is that the market is not pricing in any fear, right? Because, well, here's the kind of controversy that I want to talk about, right? So the volatility S&P 500 index, VIX, right? It basically looks at the fear in the overall markets. And right now, there is no fear, right? There's practically no fear because every single time that we pop up and there's slight fear, it gets immediately quashed or squashed, right? By the people who aren't afraid, by the market bulls. And that's partly because, or I personally think it's a major factor because of the fact that the scared retail traders who are on the sidelines are not involved in the markets anymore, which means there will be more confidence back into quote unquote regular trading in the market. So regular prices, regular volume, right? And when I'm saying regular, I'm comparing it to, back in 2021 when we had the retail frenzy, the meme trading, right? The meme trading crowd, or meme stocks. So I've been talking about this since 2021 and 2022, right? Everything that I talked about in 2021 and 2022 has come to fruition. Okay, I'm not gonna gas myself. I'm not gonna hype myself up. I'm just letting you guys know. All right, if you guys have been with us for more than 3 years, or actually more than 2 years, you guys should know that I've been absolutely on point with everything. Joel, I know you know. You joined in pretty early, I believe. You joined in maybe like 6-7 months after I started. No, yeah, 6-7 months after I started. So that's something that you guys have to be looking at, right? So, when I tell you guys important information, you guys have to remember it, all right, for the future. Because, again, I'm not trying to gas myself up, right? I'm not trying to hype myself up. I'm just speaking the facts of what happened so far in the past 3 years. I have been on point. Okay? So if you guys want to know more on certain things where I've been correct, right, join us. Join us and you will know. Okay? Make sure you guys check out the description box below. Right? So just like even just this, let me give you an example. Just like this year, when this year started, what did I say? Joel, what did I say this year? All right. What did I say? Do you remember, Joel? So everyone was going crazy, right? Everyone was saying that, oh my God, the market is going to crash, right, in December. Right? The market was going to crash. The market was going to crash in October. And what did I say? In October and December, I kept on saying, no, I don't see any reasons why the market would crash. Right? I'm not seeing the data. Right? The market breadth is strong. The economic data, sure, it was kind of wishy-washy, but it wasn't indicating anything bad. Right? I mean, obviously I went into more depth when I talked about that, but again, I said, no, the market is not going to crash, right? And guess what? The market still hasn't crashed. People said the market was going to crash in March, but guess what? The market didn't crash, and I was actually waiting until February seasonality was over, and so when March came in, I started to get into more longs during March. All right? And so, it's one of those few things where you have to get comfortable with seasonality trends and market breadth, how the overall market is doing, right? And also knowing how to interpret data, the underlying data. So obviously that comes with experience, all right? But, you just can't say everything is going to be a market crash whenever the market decides to pull back, right? Because so far, October's lows, December lows, March's lows, they're all created by pullbacks, not market crashes. All right. So again, let me give you guys this video. All right, if you guys haven't watched this, I don't know why you guys haven't watched it yet, but if you guys really didn't watch it yet, all right, let me give you guys this one. Okay. So I created this video, right, where I say the market crash has been canceled. All right. Right over here. Okay, this is the video. I put it in the chat. If you guys want to look at it again, go ahead. It's a good review. Really is a good review. All right. So, hey, Joe. Thank you, man. Yeah. So, I've just been spot on. All right. That's all I'm trying to say. I've been spot on with what I'm saying. All right. You guys can take it as it is. Okay. It's just take it on a surface level. It's not really deep. I'm just letting you guys know that I've been spot on. And if you guys haven't watched that video yet, the market crash hasn't happened, and it's linked in the live chat. Make sure you guys click it. All right. Again, for all the people who are just joining right now, I'm just talking about how on point I have been. I'm staying humble, right? I'm not saying that I've been right every single time, but the last couple of years since 2021, I've been on point with the market, right? Especially this recent year, as an example, right? October lows, December lows, March lows. We didn't get a market crash. I kept on saying that we weren't going to get a crash, but people on Twitter, on FinTwit, they're just absolutely railing everyone, all right, saying that the market is going to crash, right? But where is the crash? Because QQQ just entered its new bull market, right? So guys, I betcha tomorrow, if the market is down during pre-market, everyone's gonna say, oh my God, inflation didn't budge at all. Oh my God. The Federal Reserve is gonna have to, put the terminal interest rate target to like 6%, 7%, right? Because right now it's at 5% to 5.25% after the recent interest rate hike. And people are gonna be going crazy, right? And so that's great. That's great for bears, right? That's gonna create emotional trades, right? Where people will start short selling, or people will just start selling their positions, whatever long positions they're in. All right, it'll create a lot of emotions tomorrow. So tomorrow, make sure you guys are being careful and safe. Have tight stop losses. We will see volatility right after market open. But again, let me say this one last time. I've been correct on this as well. This is another example. The market is desensitizing to every critical economic data point or data or report that comes out, and it's getting desensitized to the Federal Reserve's actions as well. Why? Because for all of 2022, we've been very sensitive to all that data and actions by the Federal Reserve. So the market at some point will reach a breaking point. And this is the year where the market will, mark my words, okay, will feel that ultimate breaking point, and it will not care as much as last year to what the Federal Reserve will do and what the economic data will be showing us. Does that make sense, everyone? Give me a yes in the chat. Give me a thumbs up. Does that make sense? Okay, here, let me start it out. Let me start it out, guys. Let me give you guys a thumbs up. Okay. So once again, all right, I am a humble guy. I'm just letting you guys know I've been correct. That's it. That's all I'm saying. Right? That's all I will be saying. Nothing else. Nothing else. Right? Nothing more, nothing less. All right. All right, perfect. Let's go. So that's kind of what I'm looking at tomorrow, right? QQQ, especially QQQ, because the relative strength is there, the money is there, right? And also, I'm gonna be looking for XLV, right? The overall healthcare sector tomorrow. So if you guys have been wondering about my CVS position, I know a lot of people have been asking me about CVS actually lately. So if you guys didn't know, I dollar cost averaged again right over here. So last Thursday, I bought even more shares. Okay, so the earnings report didn't really faze me. I mean, look at this, right? They beat really well. The revenue, they beat by almost 5 billion, right? So the revenue continues to grow because of the fact that they have acquired 2 smaller but pretty big companies, and also they had the cash to do that. Right? I mean, I went over this really like multiple times, but CVS is really just one of those companies that you want to be holding out for. It's a business model that makes sense. I'm kind of looking at CVS from a Warren Buffett type of perspective, and I kind of like the fact that they're actually slimming down their locations. Right? They're closing down 900 stores for the next 3 years. They already closed down 300 last year, and they're still closing down 300 this year. And so next year they will have officially closed all 900 locations. But guess what? They had a total of 10,000 locations, right? So that means their operating margins, right, will go up due to this cut down in locations, right? Their capex, their capital expenditures will also most likely be slightly going down as well in the next quarter, right? And they'll be saving more money essentially, right? So, that's something that I like to see. That's good management. Why? Because they bought companies, right? They acquired 2 companies for a couple billions of dollars, right? So, they used up their cash there, right? And they still have cash, right? They have great free cash flow, right? Great revenue as seen in this most recent quarterly earnings, right? And so I dollar cost average, right at $69. I believe it was 69. Yeah. Was it 68? No, it was $69. So around 69.10, that's when I averaged down, even if I wish that I had waited a little bit more because we started to move lower on Thursday. But hey, it's DCA. You don't really care too much about the price. You just kind of have to care about where you dollar cost average on the chart. So again, I also reinvested back the amazing amount of dividends that I got. So I got a pretty good amount of dividends. So that was good. Hopefully you guys got your dividends as well if you guys have been holding equity. So I think dividends were fully paid out on the first month of May, or first day of May. So that was great to see. Just resting in my broker account. But yeah, so I'm gonna be looking at healthcare. We've been seeing big money, big institutions, big fund money, big money fund managers going just all into healthcare funds. So, I think CVS is going to be very important the next 2 to 3 years as, investors slowly pile into names that are, behemoths like CVS. This is a cash cow of a company, right? It brings in money. It racks in that money, guys, right? It's a company that shall never go away, right? Unless it's acquired by some sort of bigger, health giant. Maybe like health insurance. I don't know why they would take over CVS, or maybe in a pharmaceutical company. Who knows, right? But I think CVS will do just all right on its own. Okay, so longer term CVS, guys, I am completely fine. Okay, adding it down here. Look at the monthly chart, right? Look, we've been going straight down since after November ended of last year. All right. So what does Warren Buffett always say, guys? Buy when others are fearful. Right? This is pure fear in CVS stock. All right? And we're getting great value, right? We're getting the shares at these shares, all right? They're pretty much undervalued at this point, right? Based on the fundamentals that I've read. All right? CVS should be near somewhere at least minimum $100 minimum. Right, maximum I would say around 110. Okay, so that's a nice 10-point range, but it's a pretty good range to be looking out for. And I expect that in the next 5 to 10 years. Right, I'm going to hold, and while I'm holding, I'm going to continue to dollar cost average and continue to rack in those dividends and reinvest those dividends. Because what good are they if they're just sitting in my broker, or if they're just sitting in, if I decide to transfer them to my savings or whatever account that I have, right? So, that's something that you guys should be looking out for. CVS, again, I'm buying when others are fearful, right? How do I know people are being fearful? Just take a look at the monthly chart. We've been going down since after November, right? At the peak of December, we start to go down. And look at the volume. Huge, big pops in red selling volume. That indicates fear. Right? So that's something that you guys should be just, looking out for. Just a little hint. Wink, wink. Little hint there, right? Wink, wink. I'm just going to follow Warren Buffett's strategy. I mean, his strategy has been working for whenever he started trading, which was, I think, when he was a teenager, right? So do the due diligence, right? Which I did for you guys on CVS. Basically, I've been telling you guys about CVS for the last since March, right? Right, Joe? I think I've been telling you guys about CVS since March. I think that's right, Joe. Right? Yeah, since March. So yeah, I got myself a good amount of leaps too. I averaged down on some leaps. I'm willing to risk it for a good return. Yeah. I mean, just do your due diligence, Joel. Just make sure you don't pull all your money into CVS just because I said I like it. Right? I don't do that. Because, if everyone just put their money into CVS, I mean, everyone will be rich, right? We'll be driving the prices higher. All right, but don't do that. Just base it off of your own research as well. Especially through technical and fundamental analysis, which we also have to go over again, Joel, in our next session. So make sure you DM me about a day and time that will work out for you. So yeah, healthcare is going to be pretty important tomorrow, I think, especially if the inflation report turns out to be a very negative reaction in the markets. And people will get very defensive and they will completely just decide to run over to these healthcare funds, right? Like XLV, all right? This is a select sector fund, all right? Yeah, Joe, perfect. But good on you, man. Good on you. Looking out for your, future there. And guys, whenever you guys are in long-term stock, especially in equity position, and you guys are reaping in dividends, make sure you guys reinvest those dividends, right? I don't know why people don't do that, right? They're trying to put it back into their piggy bank. Reinvest that back. I mean, sure, that's your money that you earned by holding onto a stock, so you guys can do whatever you want. But if you don't reinvest it, that's gonna cost you. Right, just search up the average return on just simply buying a stock and just holding it, compared to buying the stock, and if that stock or that company gives out dividends every single quarter, and if you reinvest that back in, check out the returns compared to the initial scenario where you're just holding the principal equity position. Right, check it out, look it up. Right, I'm not gonna explain it. Look it up. Right. Look at that visual of that return, right? Compare those two returns and you'll be surprised. So make sure you guys are reinvesting your dividends back into that original position, okay? You can use those dividends to reinvest or DCA, right, onto that original position, right? Whatever you guys want to. Just make sure you guys are always reinvesting those dividends. All right, that's it for tonight, guys. Actually, if you guys want to have me go over some tickers, let me know now. Let me know. I'll be waiting. After this, I'm gonna head to the gym, guys, so make sure you guys are getting your exercise in. But yeah, guys, tomorrow be very, very careful. There's gonna be a lot of volatility, right? Hold on a second. Let me check LTR. Oh, damn. Oof. That's nice. Yeah, so guys, make sure you guys are checking out tomorrow, where we could most likely have a lot of volatility, right? Make sure you guys have very tight stop losses if you guys are day trading. There's gonna be a lot of emotions running around everywhere. There's gonna be a lot of fights between the bulls and the bears tomorrow. So make sure you guys are being careful. Okay, don't be too quick to make a decision. All right. Does everyone understand that? I hope everyone understands that. All right. Well, seems like no one is wanting to get some technical analysis from me tonight. You guys, look, not so sexy candle right here. Not a sexy candle here on Google. Oh, I forgot to tell you guys that I have redeemed myself yesterday from missing out on that Pinterest triple digit percentage return. I redeemed myself today morning when I got a triple digit return on Google, on my Google roll up swing trade from yesterday. So shout out to myself. So I was up over 110%. I think specifically 113%, or actually 115%. So yeah, so Google, I got 115% overall at the end of the day. I think I told my members, I think 110 or 113, I don't remember. I gotta go back. Yeah, somewhere around there, but I exited around 115%. Perfect, on the dot. Let's see. Oh, Valerie said, can you review CSIQ? Yes, I can. Yes, I can. Yes, I can. Yeah, so right now, before I even go over CSIQ, right, you guys have to realize that the solar sector is very, very weak. So the thing that I look at is TAN. Also, I don't even need this anymore. So TAN, this is the Invesco Solar ETF. This is what you guys should be looking at for the overall solar sector. I always check this before I look at individual solar stock names. For example, today I gave out EMPH to the public CFO Swing Watch members. I said that you guys can take a day trade. Shout out to Hassan for grabbing this day trade, or swing trade if you want to swing trade it. But, you know, right over here, right? I said there's a bear flag forming and he got in right here at the break. I mean, congrats to him, right? He took my trade and he went on with it, and you know, it hit lows today and it continued to hit new low days, and so, you know, hopefully he got a nice return out of that. But yeah, overall the solar sector is in a bad shape, right, due to leaders like ENPH just dropping sharply to the ground, all right, after earnings. All right, and I think SEDG, well, yeah, SEDG, SEDG actually had a jump, but it completely pulled back after earnings came out the previous day here. So last Wednesday, all right, last Wednesday after hours. So overall, again, all right, solar sector, very, very weak. All right, so remember that as a general trend here. Valerie, you said, how long more is it going to be stuck in this descending channel? Yeah, for sure. For sure. I mean, it's been just continuously going down and down and down. I mean, if you guys want to look at the monthly time frame for TAN, look at this crap. Look at this. It's been like this since 2021. So I know there's going to be a breaking point though for solar, right? As the overall public and political agendas kind of take a strong hold on solar, right? Clean energy over the next 5 to 10 years. So I know solar is going to be a strong sector to be looking at for the next 5 to 10 years for potential investments, just like CVS. So anyways, before I go off in a tangent, so CSIQ, Canadian Solar. So this company is a bit, I kind of looked into it. They're not doing too well, I would say. I mean, solar has been going up, you know, for the last 10 to 20 years, or last 20 years actually. But as an individual company, I don't think CSIQ is doing too well. But overall, I mean, you know, let me just check the. Hold on, I don't look at the. Where is it? Where is it? Where is it? Did they move it? I think they moved it. Oh no, they have it right here. Okay. Oh. Uh-oh. Maybe they're patching it up, huh? Okay, well, I guess they don't have it. Huh. Okay. Well, that's too bad. So, basically what I was trying to show you guys was, not this. Hold on. There you go. Wait. I'm having some technical problems here. Let me put that on here. But how do I go back? Oh, trading view. Close that saving. Ah, there we go. So, Back on topic here. So CSIQ, I guess I could just press the reset chart view. Yeah, whatever. I'll make note of that. So, this is very weak as well. I expect this one to hit new lows for the year. Unfortunately, I mean, it looked really great right around here in mid-April as we started to kind of flag out right underneath this descending level of resistance. But ultimately, it did not have enough bulls to kind of cover a move to the upside. So, went. Too bad. So sad, right? But there is a trend line that you guys should be looking out for right over here. So we're making this wedge, all right? So we're making this wedge here. However, I'm expecting a wedge break to the downside because so far, intermittently, right, we've been making lower highs and lower lows, all right? But now, since we have started to make this, or at least make and respect this ascending support trend line, we start to make higher lows, right? But we're still making lower highs and we continue to reject from this 10 SMA, right? And also the 21. So earnings are coming up, right? So I don't know if we're gonna get an earnings run up. Maybe we might. But CSIQ, as long as we hold over 36, right, there could be a potential move to the upside and possibly over 37.50. I wouldn't really know because, you know, when we're heading into earnings, the stock can move pretty wildly to either side. Yeah, so CSIQ, this one's not really interesting for me right now. I'll most likely wait until I see what earnings are like, what they report. Last earnings, they did pretty okay. Yeah, this is not bad. Not bad at all, right? I mean, I don't know about having a very strong revenue growth though. Yeah, they didn't have a pretty strong revenue growth. Yeah, so CSIQ, I gotta kind of dive into the fundamentals. I gotta see the balance sheet, the income sheet, right, cash flow statement. So all that fun stuff. But CSIQ, again, it's not my interest. But yeah, thank you, Valerie, for sending that ticker. Does anyone else have any tickers that they want me to go over? Oh, we're heading into the hour here now. Nice, I've been live for an hour. Yeah, I gotta fix my damn chair. It's been squeaking all year. Yeah, so Valerie again, CSIQ, avoid it. I mean, there are better charts out there. I mean, even Google is a better chart. Right, Google. Also a lot more liquid as well. Option contract wise and just plain equity trading wise. The volume is there. I mean, look at the volume. The average volume is somewhere around 30 to 35 million. All right, for the past couple of weeks. So something that you guys should look out for if you guys are wondering what tickers to trade, look for volume. Look for liquidity. All right, very, very simple. Look for liquidity, look for volume. Okay, so a simple strategy there to pick which names that you guys want to look at. Oof, damn. Oh yeah, okay. Yeah, solar companies are doing absolute crap right now. This one just fell on its face today with that big volume jump, and it just crashed to the downside. Damn. Yeah, bye CSIQ. Yeah, don't look at that one yet. Just have alerts on, Valerie. If you really want to take a look at that one, just have an alert on where you want you might want to start looking at it again. So here, let me go back to CSIQ. Let me give you some ideas. So let's say I want to look at CSIQ for long again. I might put an alert maybe around 38. Why? Well, because at that point, hopefully, I would expect the price to be over this resistance level at 37.50-ish. Plus, I would hope that the price is over this daily 200 SMA that's continuously kind of curling up higher like this, right? Eventually it will flatten and then curl downward as the price goes lower, but I don't know if the price is going to go lower. So I'm just assuming here, right? So at that point, I would hope that the price is over the 200 SMA, right? The daily 200 SMA. So I would put an alert at $38 so that if the price reaches 38, I can check the chart to see how it looks. And if I see the chart looking really, really nice and tight, maybe I'll go in. Does that make sense? Right? You know, you don't always have to part ways, right, with tickers, but remember, do not marry a trade. Do not marry a ticker. Don't look at every single ticker and just stick with it just because you just want to be, you know, able to catch whatever move that ticker might give you in the future. All right, there are other setups out there. There will be always really high quality setups out there somewhere. Does that make sense? So that's what I would do. Create an alert at $38. Keep it systematic there, right? Does anyone else have any tickers that they want me to go over? Anyone? All right, well, it seems like everyone is kind of content with today's live stream. So if you guys are just focusing on SPY and QQQ tomorrow, make sure you guys are looking at that. Oh, no, not PY. JEPI, what is that? Oh, this one. Oh, I've seen this before. I just forgot about it. Huh. JP Morgan Equity Premium Income ETF. Interesting. Wow. This has been strong throughout 2020 since inception. And even 2022. Huh. Not bad, not bad. Okay, let me do some quick analysis here. All right, so let's see. We have a pretty clear level here. So we're now consolidating into a nice into a nice bull flag. We have a level there at 50. Yeah, why not? Level there. That. So we're basically bouncing off of that 54 level multiple times here, as seen here in the last 2 weeks, right? So if we use 54 as a level of new support, well, we are now. And if we continue to do that, we will continue to move up higher and possibly break into new highs. But that's kind of depending on how the market moves tomorrow. So for this one, I think just focus on that 54 level. We might come back down to it again, depending on how we move tomorrow. On a daily, looks like we're making a wedge here, just like with the overall markets. All right. I mean, this is pretty simple to see. You guys should be able to see that. All right. Nice little wedge. If you break below 54 though, we can come back down to around 53. So the next whole number level here. All right. So something that you guys should be watching out for. And then 54.50 is also a pretty significant level, actually. Yeah. Yeah, 54.50 is a significant level because we had this pivot from here. And if we go back in the past, we were kind of being very volatile around this level, 54.50, right? We tried to break above and then we broke back down, all right? We consolidated here a little bit and then we broke back down, all right? So 54.50 is a critical level and we just literally closed at 54.55. So that's interesting. So yeah, this one pretty clear. If you break over 54.50, which is also going to be a break over this descending level of resistance, we'll probably be making new higher highs, right? And probably an all-time high as well, because the all-time high number right now is at 55.49. And then if you're looking for any type of a move to the downside, if you're trying to play a downside, or if you're not, even if you're not, there's a chance that we can come back down to retest this ascending level of support, right? Somewhere around, I would say 54.10, right? Somewhere around there, 54.10. And if you break below this trend line, then we will absolutely have to hold 54 in order for us to kind of range trade between 54 and 54.50. Okay? Something like this, right? If you decide to break down, right? Whatever it may be, maybe you might consolidate and break up higher. Who knows? All right, something like that. I don't know. All right, I'm just basing it off of levels here. There's random situations that could happen because again, I am not a fortune teller. I'm not someone who knows the future. All right, I'm none of those things. All right. But yeah. Oh. Excuse me, guys. Oof, I'm tired today. Yeah, that's JEPI for you. Oh, Snap is down too. I forgot about that. Wow. Oof, Uber was a great trade. Lyft is still doing shitty. I think Lyft should just go bankrupt soon. Goddamn. Uber just gonna lap up all their market share at this point. Anyways, sorry guys, I'm going on tangent. But yeah, that's it, guys. Hopefully you guys enjoyed this very, very long live. I'll be returning on Thursday as well. So the main live streams will be coming back Tuesdays and Thursdays. I've just been very, very busy with students and my other stuff in life. So hopefully you guys understand. And Valerie, make sure you DM me when you get the chance, when you want to come back in. And Joe, make sure you DM me as well, or just ping me on Discord what day is available for you. And yeah, there are going to be more students joining in, so make sure you guys get them a warm welcome. Especially Valerie when you come back as well. But yeah. All right, have a great rest of your night, guys. Oh, we got 5 likes. Thank you, guys. You guys are awesome for even clicking the like button. Thank you, thank you, thank you. Thank you guys so much for your time, for even joining into this live stream. Make sure you guys come back on Thursday, around 7, or actually not 7:30. Might be 6. Yeah, we're gonna go back to that original time, 6 o'clock. So Thursday, 6 o'clock, right? 6 p.m. Pacific Standard Time to around, I would say 7 p.m. Pacific Standard Time, so like an hour again. Okay, and that's 9 o'clock Eastern Standard Time, right? EST, 9 EST. So 6 PST, 9 EST. Don't forget it, guys. Okay, So on Thursday, I'll be live again on Thursday at 6 p.m. Pacific Standard Time or 9 p.m. Eastern Standard Time. Good luck tomorrow, okay? Don't trade rashly tomorrow. If you don't want to trade anything at all, keep your hands off the damn keyboard or off of your phone. All right, just watch the markets, do its thing, and then you can trade more on Thursday and Friday. All right, the market will move a lot more after the CPI and the PPI reports are done and they're reported. All right, so good luck tomorrow morning, and I'll see you all on Thursday. Thank you so much for watching, and make sure you guys watch my recent video. Make sure you guys watch my recent video. It's linked and it's pinned on the live chat room. All right, no more tangents. No more tangents. All right, I'm done speaking. No more tangents. No more tangents. Have a great rest of your night, guys, and I'll see you all on Thursday. And for all the CFO Swing and Watch members, I'll see you guys back in the Discord. All right? And yeah, see you guys all tomorrow morning. Bye-bye.